Today, corporate sustainability and social license, words and figures differ. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and problem news with a distinctively Australian flavour. As we continue our series on asbestos-related issues, we look more deeply into the behaviour of the major commercial entities behind the scandal, their corporate sustainability and social licence claims, and the rationales for corporates taking social and corporate responsibility for their actions more generally. And just before I start, I should highlight the fact that this show is based on reports from Asbestos Awareness Australia, and the full text is also available for download. The links are in the comments below. We've already demonstrated that the cumulative levels of compensation and other contributions from James Hardie Industries Limited, James Hardie, and CSR Limited, CSR, to mitigate the harms and minimise deaths caused by legacy asbestos likely total less than $3 billion to the end of March 2020. In contrast, we predict that the financial impositions of the asbestos crisis in Australia will possibly exceed tens of billions of dollars, with most of the required bills paid or payable by taxpayers, businesses, homeowners and uncompensated victims. And we conclude that asbestos is a classic case study of the ability of companies to benefit from short-term profits while socialising most of the longer-term harms. This paper considers the continuing harms and externalities generated by the prior activities of James Hardie and CSR against the stated corporate sustainability and social licence objectives and achievements of these publicly listed companies. And we're going to start with a quote from Justice Wigney, who said, "There is a legitimate community expectation that Australian companies will develop and maintain a good corporate culture which ensures that their staff do not engage in illegal, unethical and unprofessional conduct and do not act in disregard of the interests of their customers. The Australian public is entitled to expect that Australia's major corporations act as exemplary corporate citizens wherever in the world they may operate." Debates concerning the roles and purposes of corporations within society are long-standing. Some scholars and practitioners view shareholder returns as the primary or sole driver of company board and executive decisions. Others adopt a broader perspective because companies necessarily rely on, interact with, and impact other stakeholders such as employees, customers, and the broader community. Corporate models that prioritise and encompass these broader stakeholder harms and impacts are referred to as and reflected within corporate social responsibility or corporate sustainability frameworks. When operating well, these frameworks require companies to publicly acknowledge and mitigate the societal harms caused by their activities. These models recognise that corporations are a legal creation, exist because of policy concessions and require long-term community support to continue to operate successfully. Acceptance of the societal context within which corporations operate leads to a concept that individual companies require a social licence to operate. The Minerals Council of Australia describes a social licence as an unwritten social contract that is about operating in a manner which is attuned to community expectations and which acknowledges that businesses have a shared responsibility with government and more broadly society to help facilitate the development of strong and sustainable communities. A focus by corporations on sustainability and social licence concerns is rapidly becoming the norm in Australia and overseas. These principles are now encompassed within well-developed and expanding corporate sustainability and responsible investment frameworks. The framework used by most large corporations to report on their sustainability objectives and progress is the Global Reporting Initiative Framework. Sustainable corporate and investment trends are underpinned by community and investor expectations of corporate conduct. Sustainable investing is about how a company does what it does and focuses on understanding the full picture. Responsible investing is an umbrella term used to describe any process that considers environmental, social, governance practices in the investment process of research, analysis, selection, and monitoring investment. Recent research found that 90% of Australians acknowledge the importance of responsible and sustainable investing. And there are well-documented linkages between a company's capacity to manage its sustainability risks and impacts and its long-term valuation. These commercial linkages are driving investors, asset managers, and others to value companies taking the longer-term impacts of environmental, social, and governance concerns into account, including potential damage to a company's brand and reputation. Those groups look behind the reported results and commentary to assess the broader strategies driving a company's decision-making and actions, and their willingness to proactively minimise foreseeable environmental and social harms. When considering the prior and ongoing decisions and actions of any corporation, the timeframes used by its board are critical. For example, specific businesses that are highly profitable in the short term may become loss-making when the longer-term financial and non-financial harms, such as adverse environmental, social, and reputational impacts, are included. Increasing investor and community concern with corporate sustainability matters are reflected within existing company reporting obligations, corporate governance rules, and company director obligations in Australia, and are well documented and discussed in business and law papers and case law. For example, the company director duty of care and diligence in Section 180 of the Corporations Act 2001 requires a balance between the potential benefits to the corporation with the foreseeable risks of harm. Justice Eldman emphasises that the reference to harm in Section 180 is not confined to financial harm and extends to any of the interests of the company, including non-pecuniary consequences, such as the reputation of the corporation. Corporate governance obligations are therefore broadening, with sustainability factors becoming increasingly important for board accountability and investor decision-making. The importance of sustainability credentials is reflected in the annual reports of James Hardie and CSR. Both companies claim that they prioritise and operate with values consistent with sustainability principles and or a social licence to operate. James Hardie Industry Limited is a publicly listed corporation that continues to manufacture and sell building products in Australia and elsewhere. The Sustainability Review within its annual report to the end of March 2020 highlights zero harm initiatives and espouses full life cycle and product sustainability. The Sustainability Overview explains that its zero harm focus and approach to sustainability puts people first with a focus on safety. The indicator used to highlight its safety achievement is a global total recordable industry rate well below the industry average. Further, the workplace safety page in this review states that at James Hardie, we believe that safety is a non-negotiable value for business success, and we prioritise the protection of our people and those who use or interact with our products. The only mention of harm caused to those who interact with its legacy asbestos products comes in the final section of the review. A highlighted box indicates that the company's cumulative contribution to asbestos compensation totals around $1.6 billion. Most of this reported compensation likely relates to personal injury payments, but as discussed in our prior reports, James Hardie agreed to contribute to asbestos awareness endeavours and asbestos-related disease research under the Asbestos Injuries Compensation Fund, the AICF agreement. Following an announcement by James Hardie in 2001 that it planned to move its headquarters to the Netherlands and potentially restrict the amount of monies available to asbestos-related victims, the level of organised public protest and media scrutiny were intense and confrontational. This scenario pressured James Hardie and the New South Wales government and led to the establishment of the AICF in 2006. Under the relevant agreement, James Hardie is required to pay an annual agreed percentage of its free cash flow into the fund for 40 years, with possible extensions if claims escalate. KPMG audits the AICF fund liabilities and claims annually, and its reports provide a useful picture of the changing profile of asbestos-related disease sufferers. The KPMG data is significant as the mesothelioma claims paid by the fund in the 2020 financial year equated to around 60% of the notified mesothelioma cases in Australia. Harmful exposure to asbestos is commonly described as arising in three waves. The first wave impacted people directly involved in asbestos mining and production. The second wave encompasses tradespeople working with materials containing asbestos and persons in close contact, such as those washing clothes with asbestos fibres on them or children playing in asbestos dust. The third wave includes people exposed more broadly to asbestos products, for example, during home renovations. The significance of the second and third waves are highlighted in the AICF claims data. The KPMG report confirms that 52% of the mesothelioma claims from 2008 to 2019 involved home renovations, including claimants with short periods and long periods of exposure, professional tradespersons, and DIY renovators. In the year ending March 2020, the number of mesothelioma claims reached a record 438. The proportion of the mesothelioma claims involving home renovations was 55%, and this category of claims was the highest ever at 240. Notably, this source-related data is excluded from the KPMG report released in 2021, perhaps because of the political and commercial sensitivities following our use of these figures as evidenced in the growing importance of exposure in homes. So far as CSR Limited and Wunderlich Limited is concerned, well, CSR is a leading building products company in Australia and is a publicly listed company. In 1969, CSR purchased Wunderlich Limited, a manufacturer of asbestos cement roofing and wall siding, and on-sold this business to James Hardie in 1977. The total levels of compensation paid by CSR and Wunderlich are not reported publicly. The 2019 annual report from CSR states that one of our key sustainability pillars is based on proactively maintaining our social license to operate through greater interaction and positive impacts on the community. This priority is reiterated in the 2021 annual report. The 2020 annual report indicates that CSR's first and overriding priority is to protect the health and safety of all of our employees, contractors, and customers. The corporate governance statement within this report highlights the company's aspiration to act legally and responsibly on all matters and to maintain the highest ethical standards. These objectives are reported in the 2021 annual report. Despite these stated objectives, discussion on CSR's asbestos-related liabilities and impacts is limited to the material risk table and the notes to the financial report. The financial notes indicate that asbestos-related claims paid during the 2021 financial year totaled $20.6 million, including legal costs. These notes further suggest that the cumulative bill for asbestos-related compensation remains well below $1 billion. Now let's turn to the Wurfel case. In Amca Proprietary Limited versus Wurfel, Wurfel was diagnosed with mesothelioma following brief periods as a fencing contractor in the late 1990s and do-it-yourself home renovator in 2000 to 2001. The court ultimately held that James Hardie owed a duty of care to avoid injury to persons who might occasionally remodel, repair, or remove its asbestos cement products, and that this duty had been breached with respect to Wurfel. But more broadly, the Wurfel case imposes a duty on James Hardie to warn homeowners, occupants, and tradespersons of the risks of contracting mesothelioma from occasional exposure to asbestos cement products and to provide appropriate advice on the necessary precautions. Their honours suggest this duty might be satisfied by conducting mass media campaigns that acknowledge these risks and that provide appropriate guidance. They further note that a mass media public campaign could minimise incidents of future harm by alerting both occasional users and tradespersons working with asbestos cement products, thereby reducing future claimants. This legal finding is seminal as there have been no nationally coordinated large-scale asbestos risk or public health awareness campaigns conducted in Australia. Private discussions with people suggest the rationales underlying this action centre on, first, an ability to agree on the specific nature of the appropriate warnings to be given, the difficulties in managing the public response, including the risk that panic or hysteria may ensue, and expected pressure from the public to resolve or respond to legacy asbestos risks when options to do so are also costly. These rationales lack credibility and prudent public health and safety considerations when the full risks and consequences of legacy asbestos are understood. Mass public warnings or campaigns that explain the specific risks of legacy asbestos in homes and the appropriate precautions are long overdue and are vital to prevent unnecessary mass deaths from avoidable diseases. Chief Justice Kourakis and Justices Nicholson and Livesey highlight the problems arising from qualified and guarded public communications on asbestos risks. They indicate that if James Hardie had previously acknowledged the risks of occasional exposure during home renovations unequivocally and very publicly, this would have allowed government and non-government agencies, the public health and safety authorities, and the media to be less guarded in their commentary to the public. This judicial analysis is well supported by our empirical research. So let's turn to our summary and our views. The harms caused by James Hardie and CSR are at the pointy end of any debate on corporate sustainability and a social license to operate, as they involved large numbers of ongoing fatalities that should never be forgotten as mere statistics. As such, the zero harm, sustainability, safety and social license claims made by James Hardie and CSR require deep reflection. The continuing economic, environmental and societal impacts resulting from the prior sale of asbestos products in Australia are immense. We predict that annual fatalities from asbestos-related disease will be in the thousands for the foreseeable future, and tens of billions of dollars will be required to fully remediate or remove legacy asbestos products from properties across Australia. And yet, discussion of asbestos matters in the 2020 report of James Hardie is limited to a box that highlights the reported funding to the AICF, and CSR simply notes that all valid asbestos claims are met on an equitable basis. This commentary in the annual reports of James Hardie and CSR and the actions taken by these companies in response to the asbestos crisis have clearly not addressed the full extent of the societal harms caused by their prior activities. Regardless of the board and executive motivations, the highlighted responses from James Hardie and CSR do not satisfy the full life cycle and sustainability claims made, or a reasonable notion of a social license to operate. The payment of compensation, when in fact this occurs, is merely an emergency response once the harm has occurred, with the gravity of harm being the most extreme possible, the end of life. Nor can James Hardie or CSR claim that workplace safety is the top priority, when the single largest cause of workplace deaths in Australia is almost certainly asbestos-related diseases. As highlighted in prior reports, measures taken by James Hardie and CSR to warn Australian householders about the risks of legacy asbestos appear to be limited to minor contributions to a single asbestos awareness site. The efficacy of this website has seemingly been minimal because it assumes that Australians are sufficiently aware of the dangers of asbestos to proactively search for and locate this advice, and then have the capacity to appropriately respond. Our household research suggests these assumptions are poorly founded. Without further actions and commitments to prevent ongoing fatalities from asbestos-related disease, notions of sustainability for James Hardie and CSR are arguably more about public relations than a substantive driver of behaviour. Barkan refers to such strategies as masks that corporations use to improve their reputation and hide their self-interested natures from public scrutiny. James Hardie indicates that following discussions with its stakeholders, it will in future report against the GRI sustainability reporting standards. These standards require disclosure of impacts the company has on the economy, the environment, and or society. It'll be interesting to see if compliance with these standards will encourage or require James Hardie to report on the impacts of legacy asbestos beyond actuarial compensation matters. Most investors of James Hardie and CSR probably know something about the history of asbestos in Australia and the compensation schemes. The extent to which they comprehend the magnitude of the continuing risks, deaths and costs associated with legacy asbestos is less clear. James Hardie and CSR would no doubt like to move on with the least possible damage to their commercial outcomes and reputation, but the real question is whether this is assessed on a short or longer-term basis, while the funding of mass publicity campaigns and warnings on the risks of in situ asbestos and further contributions to research of asbestos-related diseases may not prima facie fit with their short-term profit objectives. Actually, such investments would make longer-term commercial sense by assisting to reduce the number of future tort claimants and by enhancement of their longer-term reputations and social licenses. As emphasised in the Wurfel case, a corporation may accept that it is necessary to take some steps to ensure longer-term reputation and sustainable profits at the expense of its business short-term profits. As discussed in our prior report, the AICF agreement prevents or makes it difficult to legally require funding from James Hardie to support the identification and removal of asbestos from homes and other properties or to recover other economic losses, but there are no legal or other barriers that prevents James Hardie or CSR from taking further voluntary actions and or from making additional contributions in accordance with their stated sustainability principles. When doing so, enhances their long-term brand and reputation. For James Hardie and CSR to achieve their promulgated sustainability objectives, we suggest urgent additional funding and actions are required to reduce the societal harms flowing from legacy asbestos. Most critically, we encourage the boards of these companies to do more to minimise or prevent deaths resulting from exposure to legacy asbestos in homes. And further, we call for investors and stakeholders of these companies who are concerned about the sustainability and reputation of these businesses to actively work together to achieve these aims. In our view, James Hardie and CSR ought, at a minimum, to provide funding to pay for, first, public health campaigns to properly warn all Australians about the risks and impacts of legacy asbestos, and second, medical research to prevent asbestos-related diseases or to mitigate the consequences of these diseases. Further, James Hardie and CSR ought to fully acknowledge their roles in creating the asbestos crisis and the continuing risks and harms of legacy asbestos. Such public acknowledgement is critical because public discussion on and warnings about legacy asbestos in Australia remain heavily guarded, especially on the scale of related fatalities and the risks of brief, occasional and low-dose exposure. And finally, a word about Asbestos Awareness Australia, which is a registered not-for-profit company limited by guarantee and is a registered charity and has the endorsement from the Australian Tax Office as a gift-deductible recipient. The company was set up to promote and enhance public awareness and knowledge of the dangers and consequences of asbestos exposure in Australia, and to advocate for legal and social reform to promote actions that prevent or minimise the harms from asbestos-related disease in Australia. To achieve these objectives, the company provides public access to widely sourced information on asbestos risks and impacts, including the associated medical, legal and political debates.